so welcome to part 2 of this stock market update, October 2019. If you have not watched part 1, go watch part 1. And then I'll see you in part 2. Alright, so in part 1, we talked about the US market. Technically, we're still an uptrend. We are bullish. Fundamentals are bullish as well. And like I said, the market is expensive. It is not very expensive, but it's slightly above fair value based on the historical PE ratio of the S&P 500, right? So I'm still bullish on the US markets. Now, I am even more bullish on the China markets, and I've said this for a long time, right? If you don't recall, if you have not watched it, do watch my earlier videos on the China market. I think it's, this is the one. So this was first posted in August of last year, August 2018, when the trade war kind of just got started, right? And I said that, this trade war is one of the best opportunities for us to make tremendous profits in the years to come. I made a small fortune 10 years ago during the great financial crisis. Remember, whenever there's a crisis, you have the opportunity to buy great companies at huge discounts because you've got to be greedy when others are fearful. And you make the most money whenever there's a panic and there's a crisis. Okay? So 10 years later, we are now seeing another crisis, but not so much in the US. Well, at least not yet. But the crisis is really in the Chinese stock market, and that's why I see tremendous opportunity. So do rewatch this video, how to profit from the China stock market crash, which I posted last year. We're going to do a quick update on China right now. Now, since then to now, the trade war has not been resolved, right? It's still going on and going. When will it be resolved? I've got no freaking clue. No one knows, right? But eventually, everything gets resolved, right? Every bear market will come to an end. Every recession will end. And those who know how to get in before the next bull market will make millions in the markets. And that's why I did in the past. I'm going to do it right now. So why am I excited about the Chinese market? Well, first of all, the Chinese market is really, really undervalued, okay? Fundamentally and technically. First, let's take a look at the charts, okay? And I've showed this before in my earlier video. I'm going to do a quick review. Now, the US market has been around for 227 years, started in 1792. China is just getting started. Like what Negan said before The Walking Dead season 9? Right, we're just getting started, right? So China's stock market has only been around for 30 years. It's like a little baby just beginning its great ascent, right? Now, if you look at the Shanghai Composite Index of the last 24 years, you can see it's been very volatile, right? China's really volatile, like a major roller coaster, because it's a very new market. But in it lies tremendous opportunities. So you can see in the last 24 years, we've been through bear markets, bull markets, bear, bull, bear, sideways, bull market. And most recently, because of the trade war, right, we're down 51% from the previous high, right? And again, my belief is right now we are at the bottom of this bear market. We're at the bottom, and that's why I've been accumulating shares in China stocks and China ETFs. Because once it begins the next bull market, I'm going to double, triple, and quadruple my money easily. Now, when will that happen? I've got no clue. I can't predict the future, but it's going to happen eventually. Just going to hold on tight. Remember, the stock market is a mechanism that transfers wealth from the impatient to the patient. So you got to be patient. It transfers wealth from the ignorant to the competent. So you got to be competent in the markets. You got to know what's happening, right? Now, like I said, we're at the bottom. We're going to go into a huge rally very soon. I don't know when. It will happen, right? Because the market can't be in a bear market forever. Now, question would be, could I be wrong? Could the market in China go down some more? Sure, everything is possible. I could be wrong, but I don't care. Why? Think about it. Historically, the biggest crash has been 73%, 56%, 61% down, right? So right now we are down 51%. At the very most, how much lower can we go? I'll give you 10 or 20% down more. And if that happens, I'll just buy more shares at a cheaper price. Because I know it's going to go up eventually. Now, eventually when it goes up, the next bull market, how high would it go? Again, I can't read the future, but based on history, it could go up 500%, 300%, 200%, you know, anyone, right? But the point is this, I am looking at a 10 to 20% more downside for 2 to 500% more upside. And it's all about risk versus return ratios. When I risk $1 to make $2 to $3 to $4, it's a great time to start investing. But again, you have to know precisely which companies to buy. If you buy crap companies, they will never come back. And that's why in my value momentum investing course, my stock trading course, I teach my students how to analyze only the best companies, how to get in when the trend is right. Or if you don't know how to pick any companies, just buy the ETF, because the ETF will always go up in the long run. Okay, now, so technically you can see that China is still in a long-term uptrend as all markets are, but right now we're going through this big, well not big, but this bear market, which is, you know, almost at the bottom before it hits the next bull run. Now, if you look at the valuation ratios, remember, a high PE is overvalued, a low PE is undervalued. Now, the US market, the PE ratio is 19, which I say is a bit expensive, right? But compare it to China. Now, if you look at Shanghai, right, historically, the highest PE ratio was 70. It was insane, right? Will we go up back to those levels? I don't know, right? We could, right? And the lowest PE historically has been 10. So 10 is really cheap, 70 is really expensive. And the median has been a 40 PE ratio. Now, where are we right now? Currently, the Shanghai PE ratio, let me just check that somewhere here. There we go. Now, this is based on Bloomberg, right? So on Bloomberg, you can see the PE ratio of the Shanghai market is 13.83. 13.83. So what does that mean? 13.83 basically means that we are somewhere that's right, we're somewhere here. We are at or very near the bottom of the stock market, which means that when you get in at these levels and the market eventually goes back to the median or the high, you're gonna make millions, right? You're gonna make millions, right? That's right. But you gotta be patient, right? You gotta be patient, right? Now, if you think Shanghai is cheap, Hong Kong is even cheaper. Why? Because of the riots there, right? I feel sorry for the people there. It's terrible. But because of that, the Hong Kong market is dirt cheap right now, right? And there are a lot of great companies in Hong Kong I'm buying at dirt cheap levels, right? So again, historically, the high in Hong Kong has been about 24, the low is about 5, and the average is about 15 PE ratio, similar to the US markets. All-time high has been 44. That was crazy. I don't think it's going to go back there. But the point is, where are we right now? Currently, the PE ratio of Hong Kong is at about 10, right? Which is, somewhere about there, about 10. So it's not at the all-time low during the crisis, but it is significantly undervalued from the mean. So as what was has been said in history by the richest people in the market, richest people in the market, Warren Buffett, he made his fortune because he bought great companies during crisis. And he's always said this, be fearful when others are greedy. And right now, people are fearful in China. People are fearful in Hong Kong. And that's when I get greedy, right? And years before that, this guy, John D. Rockefeller, one of the ancient billionaires, as well as Rothschild, another billionaire, they both said that the way to make money, big money, is to buy when there's blood running in the streets. And sadly speaking, literally, there's now blood running in the streets of Hong Kong. And that's why I'm buying right now, because it's dirt cheap. Now again, before I ever enter positions, I don't do it blindly. I always consult the charts. The technical charts will tell me, are we still on an uptrend? Are we at a support level of an uptrend? So if you take a look, for example, at the Shanghai index, well, this is what it looks like, right? This is the Shanghai index. And you can see overall, the long-term trend is always up, as is in any index, well, except Japan, right? And you can see, whoa, very volatile. It's like a huge roller coaster. And right now, it's finding support at the 200 moving average. I'm looking here at monthly candles, right? Very strong support. And so again, moving averages help us to determine the support levels that once it bounces off that we get in, right? So I've been adding more at that level over there, right? So again, we could come back down, you never know, but it looks like the trend is still very much going higher. And the way I buy the China ETFs is I buy them on the US markets, right? I buy most of the stuff on the US markets. And one of the China ETFs that I buy is ASHR. Okay, this is the China ETF that tracks the Shanghai index, and this is listed in the US markets. And the reason why I like to buy them on the US markets is because I've got better liquidity, and I can also use options, right? I can sell covered calls, I can sell cash secured puts, I can use options to maximize my returns, right? So you can see that over here, that's the 200 moving average, the red line, and it's acting as a strong support, bouncing off the 200, and you can see again, bouncing off the 200, that would be a good point, or that was a good point for me to again accumulate more as I wait for the trend to continue going up to all-time highs, right? So this is China ETF. Okay, so I mentioned before, I think that a lot of great companies in China selling at discount, and one of the companies I mentioned in my last video, again, if you have not watched that video, please check it out. I posted it about 2 weeks ago, this one, right? So I said, this is the hottest new stock in China. I'm buying a shitload of it, and it's a potential 10-bagger, right? And this was posted on the 4th of September last month, right? And the stock I talked about was Meituan Tianping, which is now the hottest app in China that people use to order everything that they want. They order food, they order transport, they order rooms to stay in, and it's a super app, right? And I talked about it in my last video. Again, watch the video, and I said that my entry price at the time was 70 Hong Kong dollars. Okay, and the great thing about being in my community, of my private community, is you get live updates, right? So before I buy, I tell my students I'm buying now. After I buy it, I said, okay, I bought it, right? So my students are following me every day live, right? So this is on one of our chat groups, and this was back on the 10th of September, okay, where Meituan Tianping came down to my entry price of 70 Hong Kong dollars. And I said, okay, Meituan is approaching my ideal buy price of $70, getting the dry powder ready. Let's get in, guys, right? So you can see my students are all over there. And again, I don't make recommendations. I'm not a licensed advisor. I just tell my students what I'm doing as an investor, and they make up their own decisions based on their own analysis, whether they want to buy as well or to not buy. It's really up to you, right? Never listen to people blindly. You have to do your own research. And these are my students, right? Joe, he said, I bought Meituan at 70 Hong Kong. I bought some at 73 over there. So we went in at $70 on the 10th of September. Okay, so why did we buy at $70, right? Why not 68? Why not, 75, right? Again, I look at the charts. So at the time when I first analyzed Meituan, it was on the 2nd of September, it was somewhere there. And I said, I'm not going to buy that price because I see a resistance with a gap up over there. So I always wait for the stock to fill the gap. We call this a gap up, pullback, retracement trade. So very often when you see a stock doing that, it gaps up, right? Gaps up, there's a gap, and you want to wait for it to come back down. So the start of the gap is a previous resistance, it becomes support, bounces off and goes, right? So you always want to enter at the previous resistance, which was the beginning of the gap, and you enter before the next impulsive wave up. So my buy order was at $70 over here. So I was waiting for it to come down. Boom, it hit the previous resistance at 70. We got in over there, and it's up 20% in 23 days. Amazing thing is this stock is listed in the Hong Kong markets. In the last 2 weeks, Hong Kong was in crisis. There were riots every day. The entire stock market came down. This was one of the only stocks that went up 20% when everything came down. Why? It is not luck. It's because when you pick fundamentally great companies that have good technical charts, they will go up despite the market going down. So that's why picking stocks with the right research is so important. Now, some people have been asking me, okay, Adam, if I miss that entry and now it's gone up that much, should I still get in? The answer is no. Never buy a stock on a high. Never buy when it's breathing out. You always buy when it's breathing in. When it retraces to a support level, that's when you enter. Now again, for me, this stock is not a short-term trade. It's not a one-night stand, right? I'm looking at a long-term investment. So I bought it at $70. My long-term target would be probably $200 to $300 per share. Again, that's going to take, not overnight, it's going to take months or years. It's going to go to $200 to $300, right? And I like to buy more, by the way. I don't just buy one time. I keep adding to my positions, but I will not buy right here. Why? Because remember, nothing goes up in a straight line. What goes up has to come down before going higher, right? So I bought there. Now it's here. I'm hoping that it's going to come back down to the 50 moving average, which it normally will do. When? I don't know. Eventually it will. And when it bounces off the 50 moving average, I'm going to add more there. Goes up again, bounces back, add more there. So remember, as long as you add, when it retraces, you get in at a good price. Do not ever add on the way going up, because that's when people get excited, they buy, and the moment they buy, they see a retracement and they sell and they lose money, right? So always buy when people are fearful and not buy or sell when people are greedy, right? That's the way to make money in the markets. Now, let me revisit some of my earlier trading and investment positions and let's see how they've been doing, right? Now, again, if you have not watched some of my earlier videos, do watch it. And one of my videos about a month or two ago was on this: how to profit from the coming bond bubble crash. So I said that bonds are in a bubble, right? Corporate bonds, government bonds are in a bubble, and I know they're going to burst and they're going to crash, right? And again, I never buy or sell based on news. I always look at the charts. So I like to look at the TLT, which is the bond ETF, right? So this is the 20-year bond ETF. And if you remember in my video, I talked about shorting the bond ETF because I thought it was overextended, right? And I looked at the weekly charts over here, right? You can see it's a resistance, resistance, resistance. And I took a short position over there, right? Shorted it over there. And I used the daily candles to time my entries. And yep, there it was, right? Okay. So I took a short position over there. Now, the moment I shorted it, it came down. Notice that the 50 is a strong support. Okay, so the moment it hit the 50 moving average, it broke below there. But the moment it jumped back above the 50, I closed my short position. So I shorted it there, I closed my short there, and I took some nice profits out of the market. Okay, now guess what I did? The moment I got out and I saw that the price was getting back above the 50 moving average, the moving averages are sloping up, I went long over there. That's right. So now I'm long the TLT. I bought the TLT for a short-term trade. I'm in it right now and I'm looking to take profits somewhere there. So what's my point? My point is this: even though fundamentally I feel that bonds are going to collapse, they're going to drop even more, but I still go long over here. Why? Because based on the charts, it is still on an uptrend, right? And it has not burst yet, right? So once it bursts, I'm going to go short again. So I always look at the charts for entry positions. So in the short term, bonds are still going up. And what will trigger a burst in the bond bubble where it will really collapse to high heaven? Which means if you look at the weekly charts over here, okay, what would cause, okay, I tell you what, let me zoom out to the monthly charts to show you an even bigger perspective. Okay, there we are, right? So if you look at the monthly charts, right, what would cause it to crash all the way back down? A big crash would be you have to see a rise in interest rates, which is not happening yet, right? So right now, the Fed is cutting interest rates, the world is lowering interest rates. So as long as people keep cutting interest rates, all right, that will continue to become more overvalued. The bubble will keep blowing up, all right? And we may have short-term corrections, but the big crash will only happen when the Fed raises interest rates. It's like you prick the bubble and the whole thing collapses. So I'm still waiting for the day to come. And when that happens, I'm going to short the bastard again. But in the meantime, I shorted it. I took my profits and I went long again for TLT. So that's an update on TLT. Now, about a year back, I talked about some great companies at discounts. One of them was Boeing. Remember the Boeing 737 crash, right? And Boeing became very undervalued and I started buying Boeing. So I'm making good profits on that one. Boeing's contributing to my portfolio profits. Again, the plane has not resolved. The crisis is still going on, but the stock has more or less on the road to recovery. Remember, the market always precedes the fundamental information. Facebook, right? So again, watch my video on Facebook. It was first posted July of last year. And again, I said Facebook is a great company at a huge discount. I bought Facebook, I'm still buying, and it's been very profitable so far. So Facebook's been very profitable. Boeing has been very profitable as well as Google, right? Alphabet, and Amazon as well. Now, Amazon's not gone up yet, right? Still going sideways, but I'm accumulating more positions. Now, if you look at the charts, let me show you Facebook. And let's take a look at the daily candles first. Okay. So if you recall my video from last year, Facebook was hit by the data scandal, right? And a lot of people were saying boycott Facebook, and a lot of bad news. And that's when I love to look at a stock. Because whenever there's bad news, I get a great company at a huge discount. But the moment the bad news is released and the stock drops, you do not catch a falling knife. Don't buy when it's going down because you never know how low it's going to go. Cheap can get cheaper, low can get lower, right? So once it drops, you can see this is a downtrend with the price making lower highs and lower lows. As long as the price makes lower highs and lower lows, on a downtrend, you do not want to enter the position. So I started buying over here. I started buying when I saw it making new highs and new lows. Right, you can see the price making higher highs, and from lower lows, it makes higher lows. And the 20 crossing above the 40 EMA, the price crossing above the 50 moving average, all this is an indication of an early change in trend. So I started buying over there. And when we had the 50 crossing above the 150 at a strong support, I added more positions over here, right? So since then, Facebook is now going up. And again, it doesn't go up in a straight line. You will have retracements. Retracements, as right now, it is retraced back to the 200 moving average. The red line you can see is a strong support. So I bought more on Friday over there, okay? Because it's a strong support over there. What's Facebook's intrinsic value? The intrinsic value of Facebook, and again, this is my intrinsic value calculator. This is my secret recipe, my 11 secret herbs and spices that tells me what's the true value of the company. And you can see that from Facebook, the intrinsic value is about $226 in intrinsic value. So, and again, my students, they get all these calculators as part of the course package. Whether you attend my live course or my online school, you get all these calculators that calculate for you the intrinsic value of the stock, which is crucial to knowing if you're getting it at a good price. So my valuation for Facebook is about 220. That's my valuation, which happens to be also the previous high, right? So again, getting in from here, we've got a lot more upside to go on this stock. But again, I started buying over here, so I'm already pretty much in the money, but I'm not going to get out yet because I can still see there's a lot of room to run even towards fair value. Okay, now if you look at Alphabet, like I said, big tech is currently undervalued, right? You can see again, it's finding support at the 150, very strong support over there, and it looks like it's going to continue the trend unless Trump does something really stupid. Okay, intrinsic value of Google is about $1,300 per share. All right, so at 1,002, it is slightly undervalued because my valuation is about 1,003. So we are undervalued right here. Boeing, all right, so Boeing was something I started buying. You can see the daily candles are a bit messy, but you can see a strong level of support over there, right? There's another level of support over here. So I was buying at these support levels. When a stock goes sideways, moving averages are useless. Moving averages tend to crisscross and they don't act as dynamic support levels. When a stock goes sideways, you have to draw horizontal support and resistance levels to make your entry decision. Or you can zoom out to the monthly or the weekly charts. In this case, if you zoom out to monthly charts, you can see that the 20 EMA acts as a strong support level for Boeing, right? So at the 20, you can buy over there, buy over there. These are good levels to buy as it bounces off the support back to new highs. My valuation for Boeing is, that's Boeing, is $493. That's the intrinsic value, which is even higher than the previous high point. It will get there eventually. Remember that in the market of commercial airlines, there are only two players, Boeing and Airbus. That's it, right? Boeing's not going away, Airbus not going away, right? And more people are flying, eventually it will go higher. So this recent crisis has been a great opportunity to get in at a great price. So that's a quick review of my previous calls. These are my long calls. If you remember, I had some short calls as well. I shorted GE. Where's my GE? Yeah, that's right. So I talked about GE and I said that in my opinion, GE is going down. So I'm short GE, as well as, now this was back in August 2019, and Kraft Heinz. If you watch my video on Kraft Heinz, February this year, I said it's not a buy, it's a short, right? So I'm short GE, I'm short Kraft Heinz, and short means when it goes down, I make more money, right? So I'm betting on it going lower. That's GE. You can see that it's below this level. Moving averages are sloping down, so I'm looking for it to go lower. I'm still short GE, but for GE, when I short, I have a stop loss. Whereas when you do a short, it's a short-term speculative trade, so my stop loss is somewhere about 980, above the previous high. So if it goes back above 980, I'm going to cut my short position and admit that, hey, I'm wrong for now, right? So again, you can't be right all the time. You're going to be wrong at times. You just got to know when to get out when you're wrong for a short-term trade. Now, you can see Kraft Heinz, again, in my opinion, stock to short. You can see very, very clear downtrend, right, going all the way down, right? So I'm short Kraft Heinz, and my stop loss is above the previous high at about $30.50, right? So as it goes down, I'll take profit at about $22.50. I'm going to take profit off my short positions. All right, so that's a quick review of my previous trades and calls and all that. Let me end off this update by talking about an opportunity that I see right now. And the opportunity that I see right now is in health insurance companies in the US. Now, I wrote about this extensively in my report. Again, my students will get my report every month, where I will share in detail exactly what I'm doing and the opportunities I see. And like I mentioned in the previous video, this report to my students, some of them have been worth thousands of dollars. Some of my big clients has been worth millions of dollars. They've made huge profits just reading my report every month. And this report is free to my inner circle, to my students, right? So in my report this month, I actually mentioned, that's right, an opportunity in the health insurance industry. Health, we call it managed care companies, right? Now, historically, health insurance has been a very defensive sector, recession-proof. That's always been selling at a high premium. And my favorite stock is United Health, UNH. that has been one of the best performers in the S&P 500. But recently, UNH got whacked. The stock price had a drop of 30-40% and became undervalued for the first time in a long time. And I got excited. So I started buying. So I've been buying United Health, and let me tell you why, right? Not just United Health, but all the companies in that same industry. For example, UNH, ANTM, CI, HUM. These are all the major players in the health insurance industries that have been whacked. Now, what happened? What happened is Elizabeth Warren, right? As you know, 2020 is the next US elections. If Donald Trump is still around, he'll be going up against the Democrats. And now the Democrats are fighting for the nomination. So Joe Biden's the front runner. And I prefer Joe Biden because he's more at the center. He's more centrist, right? But people like Bernie Sanders and Elizabeth Warren, they are a bit too much to the left, right? So Elizabeth Warren has been someone who's been very critical of big business. She says, I'm going to tax the shit out of the rich. I'm going to break up the banks. I'm going to break up Facebook. I'm going to break up Google. And I'm going to have Medicare for all, which means private health insurance companies will lose business. She's going to limit what they can charge. So if she becomes president, people are fearful that with her new policies, right, private health insurance companies are going to make less profits. Okay, and some people are freaking out, they're selling the stock, and it's crashing. Okay, so I see an opportunity to buy the moment I see a support level. Why? And aren't I afraid of this happening? Well, yeah, but remember this, the market always overreacts to bad news and overreacts to good news. And whenever it overreacts, it sells stock at ridiculous prices, right? Now, I don't think she's going to become the president. But even if she does become the president, it's going to be very hard for her to push these policies through. As you know, American politics, they're always having this deadlock between Congress, the Senate, the White. They're always fighting, right? And to push new, policies through it takes years. It's almost impossible, right? So they can say all they want. Will it actually happen? I highly doubt it. And I'm willing to bet my dollar on it, right? So because of this fear of Elizabeth Warren, Bernie Sanders becoming president, what has happened? The whole industry went down, right? So you look at United Health. Now again, if I show you the long-term charts, you can see that historically, United Health has been a fantastic performer, right? Making money every single year, wow, right? But again, it hit a high of 287. And because of this political drama, it's down to 212. So it's down, let me see, how much is it down? 212 divided by 287. It's down about 27%, about 30%. It's down 30% from the high, which is a very rare opportunity for this company because it's a great company, right? If you do the fundamentals, sales are going up, profits are going up, brilliant cash flow. It's a great business. I love the business, right? And it's right now at the 40 EMA support on the monthly candles. If you look at the daily candles or the weekly candles, look at weekly candles, right? Right. So, yeah, you can see that it's been selling off and there has been a support level over there. So it's at a strong level of support over there, and I only enter at strong support levels. Okay. What's my valuation for this guy? My valuation for United Health is about $361 per share. $361. So at $212, selling at $212, it is at a it's at a 41% discount to valuation, right? So it's really cheap. Now, again, I'm not saying that cheap can't get cheap, but it could go lower. You never know, right? You can't read the future. But to me, the risk to return ratio is phenomenal. I'm taking Small risk for huge rewards eventually when the drama abates. Okay, now besides buying United Health, you could also look at, some of my students are looking at the ETF, and that ETF is IHF. So this is the entire health insurance ETF. And if you look at the weekly candles, you can see that there's a strong support at the 150 moving average. The green line, bouncing off support, bouncing off support, bouncing off support, bouncing off support, and it ended with a pin bar. So that's a pretty good signal that there's a high likelihood we're going to see a reversal back up. And again, there's no 100%, so if you're taking a trade, do have a stop loss in place. If it's a long-term investment, which for me, I'm getting into a long-term investment, I would not have a stop loss. I would hold it for dear life till it makes its new highs. So great risk to reward ratio in this case as well. All right, so that's the major opportunity I see in the markets right now. I hope you enjoyed this video. If you have, remember to click the subscribe button so you get my next video the moment it comes out. At the same time, do visit my websites, wealthacademyglobal.com for my live courses, or piranhaprofits.com for my online school. And do join me on Facebook as well. Facebook, check out my handle, Adam Khoo Success. And join me for my latest updates on Facebook as well. With that, this is Adam Khoo, may the markets be with you. I'll see you in the next update. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com, where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses, where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.